9.2 billion to stocks, 3.3 billion to gold, 2.5 billion to crypto, 0.7 billion from bonds. Now, if you look at that line and you say, well, that's not a lot of money to crypto. Yeah, it's huge because there is no money in crypto. Look at that chart on the right. It's out of nowhere, right? I mean, look at that chart on the right when the ETF started. Okay, that's huge. Now, why the big spike this week in crypto? Well, there's a couple reasons. Material reasons. The CFTC. The Fed has removed oversight, or I guess the word would be, I'm throwing my own words at this, cautionary oversight or under observation stuff on crypto, and they've pretty much given the green light to banks to do what they want to do. This is on the heels of the Genius Act being passed, which means stablecoins are coming, which means reasons to own treasuries are going to be reinforced, which means crypto will benefit from that. And it's as a quick side note about the U.S. deficit. If the problem is bonds, in the sense that the world doesn't want to lend us money anymore, that's not true, but let's just take that to a worst case scenario. The world doesn't want to lend us money anymore. Then the U.S. can do one of several things. If we want to maintain our standard of living, then we need to either buy our own bonds, find someone to buy our bonds. How's that? Find someone to buy our bonds and loan us the money, but that China doesn't loan us anymore. Or we need to magically have industry that's built overnight that can export goods and keep our quality standard of living up. Now, that second part's just not going to happen, not overnight. And so, if you want to maintain your standard of living, you can't. But you can lose your standard of living one of two ways. You can lose it by, assuming you can't find a buyer of your debt, you can lose it by buying less, or you can lose it by debasing the dollar. So if we do not find a buyer for our treasuries, the dollar gets debased through yield curve control, which we talked about a lot, never materialized because, there's a lot of reasons the Fed doesn't have to do yield curve control yet. It really would be a sign of capitulation, we think, if they did that. They've done soft yield curve control. We are still in the ante-room of it, but so far they haven't done it. That would be a monetization of the debt. That would be cheating. That would be something like what happened in the 70s as we monetized the debt after those wars, Korea, Vietnam, what have you. So monetization of debt, right? The other one is find someone else to lend us the money. Well, who's going to lend us the money? Well, if no one else will, in a straight plain vanilla world, we have to borrow from ourselves. We have to buy our own bonds. The government needs to stop buying its own bonds, and U.S. citizens have to buy them. Now, in a war, that's easy. Buy our bonds, support the country, and it works, right? But even when you're spending that money on bonds, that's money that you're not buying stocks with. That's money that you're not buying your Costco patio sets with. So there's a big trade-off here. It's just not going to add up this way unless we can really find a way to get people, this is where crypto comes in, to buy our bonds without demanding higher rates. And that's crypto. So this part is my opinion. But if you see the Genius Act, which says stablecoins are a go under FDIC banks, and you see the government pulling its, what's the term, observation or whatever they're calling it, of the crypto markets, well, you're setting the table for stablecoins. And stablecoins are, in many ways, an excuse, an ability, a rationalization to not sell treasuries, which means to own treasuries. It helps the banks. They can own treasuries and deploy them. It helps crypto because anyone who has treasuries can stake the treasuries for crypto. And I'm simplifying this greatly. Please understand that. And it also helps the US project its dollar dominance throughout the world. You see, if we create a product that's a stable coin and you own a treasury, you can buy our stable coin. And we're going to have the best products out there as American financial ingenuity would dictate. So get ready for the gold stablecoin. Get ready for the silver stablecoin. Get ready for the everything stablecoin. And that's why crypto has money flowing into it. And that's the country that we need to replace China, at least in part. All right, next. Well, not next. Staying with the weekly flows. So that's why the crypto's inflow is significant, and that's why it's happening. And that's why it's much bigger than it looks. Flows to know crypto largest weekly inflow of 2025. There you go. I just said that. Treasury's biggest weekly inflow since March of 23.